In this video, we speak with an SMB trainee about how a good learning experience leads to money for you. Hi, I'm Jeff Holden, Head of Recruiting at SMB Capital, a proprietary trading firm located in Midtown Manhattan trading equities, options, and futures as automated and discretionary traders. In this video, we review a trade with a developing trader and discuss what trade they were making and how getting good reps in a good learning experience leads to significant outperformance. Let's get to work on sharing this trade lesson with you to help grow your trading. We're here today to review one of your recent trades, but if you could start by introducing yourself.
Sure. My name is Radu. I have been a full-time trader now since 1.5 years. I started with options, and then later on I started doing equities. I went through the Winning Trader program through DNA, and now I am in the New York SMB offices, and I'm training here with the team.
Yeah, great. Cool. Well, I'm excited to talk about your trade today. I think we've gone through it briefly, but I'm happy to go through it again. And so if you want to start, and
Sure.
we'll kind of go from there.
So this is a trade that I took on XPEV. I call it a higher time frame momentum breakout trade with a catalyst because we're November 23rd, and it's also the date where XPEV had their earnings report. So let me start by telling you what I'm looking for in a higher time frame momentum breakout trade. So there's a checklist that I'm using, and it's not only one particular item that makes me take the trade. It's a list of things that I'm looking for in order to take that trade. So I am looking for a stock which is on an uptrend on the daily chart. It's consolidating near the highs. I'm looking for a wedge pattern. In this particular case, it was consolidating near the 50 level. Of course, a catalyst, which is fresh news or earnings about that company. I'm looking for an R-vol of minimum 3.
So let's go back to the catalyst really quickly.
Yeah.
So fresh news or earnings is a broad approach towards it for a momentum breakout trade. But is there anything maybe that you pay attention to specifically about the earnings, about the news catalyst? You know, are you using any of that, the more fundamental idea in your trade idea generation, or are you just kind of, as long as it has a catalyst, enough of the other requirements should cover some of that?
Yes, but it's also very important to understand what's behind that catalyst, what's behind that news.
Yep.
And we'll go through it a little bit later, but what interests me in particularly about XPEV in their earnings report was that they are already guiding up. So not only they had very good earnings, but they were also guiding up. And we do know that when we are looking at growth stocks, most analysts and most institutional traders will not only look at by how much did they beat earnings and expectations, but also what is the growth expectation and what is the guidance for quarters to come.
Yep.
And this was an extremely good guidance from XPEV.
Perfect. That's great.
Yeah. The reason why I mentioned R-vol of minimum 3, sometimes I can accept less than that, but only when we are dealing with a very large cap stock.
Yep.
In these kind of situations, I prefer it to be at least 3.
Because R-vol can be a dynamic measure based on the type of stock that you're trading. If it's a low float, low cap stock and it's trading with an R-vol of 3, that might not be impactful at all. Yeah. If it's Apple and it's trading with an R-vol of 3, that might be pretty significant.
Yes.
So having a minimum standard, kind of, you don't have to be perfect, but you want to have basic guidelines.
Yeah. Then what I'm looking at is also, it has to be in a hot sector. And in this particular case, we are talking about electric vehicles, which has been recently been very much in play, especially after President Biden announced passed the infrastructure bill through Congress. So during these past few weeks, all the EV stocks, Tesla, Rivian, XPEV, NIO have been in play. XPEV less. I think people were expecting actually to see what's in their earnings report. So
it's also China, so the Chinese vehicle makers kind of traded a little differently from the U.S. ones.
Yeah.
But they're in the space, and so you can get the subsets of groups running.
True.
And just because it's a Chinese EV maker versus a U.S. EV maker doesn't always matter, but just being aware of those, and it sounds like you were kind of aware of those, so that's good.
Yeah. And then all of this actually, what it does, it triggers for me what we call an A+ trade. An A+ trade is a trade where I will risk more than I usually risk on a regular trade. This, I think, it depends on each trader. What I'm doing, actually, I'm risking 4 times the normal risk that I'm putting on
because
on
you've used your checklist to make sure you have enough checks in your favor before you're even coming to it.
Yes.
So you've identified a high probability setup.
Yeah.
And something that you're willing to take more risk on.
Yeah.
That's a great thing. We'll talk about more later when we go through the day, but that's a really good thing to have a checklist in place so that you're mentally prepared.
Yeah.
I'm going to be risking more than I'm used to. And this is an opportunity that's worth my time and energy. So that's great.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
Big picture. So this is actually coming after the day when we put the top in the S&P. The previous day was quite particular because in the beginning, President Biden announced that he will nominate Jerome Powell for a 2nd term. The markets went up. The S&P went as much as 1% higher, but then the market sold off, and that is a move that very few people expected. So also the VIX briefly went above 20 for the first time since mid-October.
And the VIX is an important characteristic of your overall trade idea. So in a checklist, you might consider for the trade that you're making, particularly on a momentum breakout trade, it doesn't matter if the VIX is above 20. Doesn't matter if the VIX is above 25. Doesn't matter if you have extreme cases where the VIX is above 30 or 40. You might want to classify that because that might be a check either for or against your trade. If you're in a really high VIX environment, maybe you don't want to take as much of a momentum breakout trade, or maybe you do. It depends on the setup, and it depends on the opportunity that you're looking for, and it depends on the other components. But that's something that we're seeing from a lot more traders, is they're understanding what VIX environment they're in. And they're aware of that, and that's helping guide their decision-making process. So I'm not saying it matters, and I'm not saying it doesn't, but it's potentially something to consider. So
I think it's very important because it always helps if you have some tailwind for your trades. Yeah. And we'll see later that this is exactly what happened with this trade. What was interesting was that the selling interest was concentrated in large growths. So basically, it's the Nasdaq that got impacted by this. So going into the day with this information, it made me wary of the situation. I knew that I needed to pay attention to what's happening in the market, because otherwise I may be in a position where I'm trying to make a trade and then that it quickly turns against me.
For a momentum breakout trade, if you don't have the wind at your back, it can get very bad very fast. Yeah.
So we're starting the day and the futures are trading flat. Everybody is asking themselves, will this be continued momentum to the downside, or can we bounce back? The intraday fundamentals, so going through the ATR of 2.9, average volume around 10 million shares, an RVOL of 3.12, which, as we discussed earlier, is exactly what I was looking for. The institutional ownership is not that big, but it's usually the case with some of these growth stocks. It's gapping up 4% on the earnings. And one particular thing that I was watching going through the day was the EV sector, so Tesla, Lucid, Rivian, and there's an ETF for electric vehicles, which is called CARS. So I had that on together with the SPYs, the Qs, in order to make sure that I follow what's going on.
For momentum, that's a good thing to pay attention to.
Yeah.
Because if you have more momentum across the sector, it might actually make your trade better. You might want to kind of listen to the opportunity and evaluate how quickly are you taking profits, how are you managing your risk. It may not change the way you initiate the trade, but it might change how you exit the trade and what your expectations are for the type of trade that it actually is. And that's all. This is all very good, and I like the information, and I think the part that we're getting to, which will be nice to cover in the trade, is this is all setting the stage for identifying what are the different types of trades you could get. You've set this as a breakout trade. You can get a momentum breakout trade. You could get a slow grind trend breakout trade. You could get a trade that rallies up, fails, and then goes. You know, there are all these different types of trades that you could get, but you've done a good job of setting the stage here for what types of trades could you just sit down in your seat and look for. And you've taken what can be a very challenging process of, there are about probably 10 variables you've outlined here that if you're thinking about all those in the moment is going to make it very hard for you to make good decisions. But if you've isolated a lot of those variables and taken it down to 2 or 3 really important variables, which might be what's the price action look like, and what the price action of this stock, and then what are the other stocks in the sector doing, those 2 variables are manageable. Yeah. All of the other variables around it are not manageable in the moment. You have to get it down to what are the core variables I need to pay attention to in the moment so that you can continue to execute well.
Yeah, and there's 2 things here. I think that one of them is keeping an open mind at the open. Because you don't know what the market is going to do. Yep. And basically you need to be prepared for anything. You've put all this work in place, but the market will do what the market wants to do, Mr. Yeah. Market. Therefore, you need to keep an open mind. And then the second thing is basically having a game plan and knowing, based on how the market will move in the first minutes, how you will react to that. And that is not something that you can do on the spot. That needs to be prepared. So we've talked before about the catalyst. So they reported both upside results for Q3 and guided Q4 above consensus. And this is actually the information that interested me the most, because for a growth stock, this is what's very important. They actually doubled quarterly vehicle deliveries year on year, which is quite significant.
And were you able to, that is significant on first read, were you able to do any of the research or read any research emails or research reports about this from the analyst?
That is something that I should be doing more. No,
okay.
On this particular thing, this is one of the actions that I'm looking at.
Okay,
I haven't gone
yeah.
too much into.
Because it was just something that we just talked about, yeah.
Yeah,
so.
And it's very interesting to see what they say.
Because we may have these ideas of what we think, but it might be that the analysts, that certain analysts feel like that's not fast enough growth. I mean, yeah. or something else. So it's always interesting to see. So, particularly on a catalyst-driven momentum breakout trade, you have the catalyst before you have the momentum breakout. So understanding how people are viewing the catalyst can potentially be a source of edge. And it could even be another check mark in your favor if you are reading analysts saying this is the greatest quarter they have, yeah. the future of the company shifted in a really positive direction. If you have analysts kind of pounding the table maybe it goes from a 4-hour trade to a 5-hour trade or a 6-hour trade for you. And really, it's not trying to take away anything from what you've done. It's just how can you get better at this for the next time.
Yeah.
So.
And it's a learning experience,
Correct.
after all. So
Yep.
that is exactly what I'm
Yep.
looking for. This is another thing that I'm looking at when
This is really good. I like this. Yeah.
when I'm trading a stock which has reported earnings. I like to use this data, which is automatic from a website, and it tells you how different stocks behaved during earnings day. So you get to see what was the opening price, how did it open, and then what was the price movement within one trading day. What were the highs, the lows, the maximum, which tells me, in this particular case, I wouldn't say that the information was extremely useful because the previous 4 earnings of XPEV were quite different in terms of how it behaved. But there are situations, and I remember it was Macy's, I think, where you clearly see that there's follow through based on how the stock opens. So it opens lower, it goes much lower. It opens higher, it goes much higher. And again, this is not something that that doesn't trigger by itself a decision for me, but it's something that I can add to the checklist and say, okay, if this is what they do on most earnings days, then it's something that I can use.
Yeah, that's great.
The long-term technical analysis of the chart. So after the run-up from October lows, it has been consolidating for a month between 45 and 50 levels. The uptrend was respected. 10 SMA, simple moving average, 20 SMA, also both held, despite a few attempted breaches. And 50 acted as a very important resistance point. It was rejected 4 times in the previous 7 trading days. So that information in itself made me look for 50 as the key level that I'm looking for the breakout to happen. Yeah. Based on this information, then I was building my game plan. Yeah. I don't want to think through this kind of things when the open happens. I want already to know what I want to do. So if the first move is up, then my intention was to watch both the tape and volume closely. If the level breaks immediately, I needed to wait for a 1-minute candle close above 50 and then enter the trade, but also keep an eye on volume. Because if that doesn't happen on volume, then I may be faked out. Yep. And my stop would be below the opening price, which was at 49. If 50 breaks and the volume is weak, then I'll wait more time, around 15 minutes maybe, and then reassess what my entry should be or what my stop should be. Mm-hmm. If the first move is down, then I will be watching for important levels from the previous day, and then and this is very important for me because also based on my learning curve. I wanted to wait for a reclaim of the opening print. And why is this important for me? Previously, I used to buy a lot of support levels, and especially at the open, when prices are a bit all over the place, I used to get stopped out because there's a lot of volume in there, and sometimes a stock either overshoots to the downside or to the upside. Yep. So this is why I have been working a lot on trying to get that confirmation, which can be in the form of a back through open, so reclaiming the opening price, or if the stock goes down a long way and I'm still convinced that it should bounce, then I wait for the down trade to break.
Yeah.
On volume.
Yeah. So you're allowing yourself to be late to the trade.
Yeah. Yeah.
Essentially, but. You know, the reality is if this trade is what you think it's going to be, you can be a little late to it. You can protect your P&L because you're not drawing down in the trade. You're putting yourself in a position where if it does work, you're going to take advantage of the actual trade you're making, but you're not going to predict it. Yeah. So identifying that's really good.
Yeah.
The one thing that you've done through all of this, up until this point, including your game plan, is you have set the stage for a really good learning experience, like we were talking about kind of with Bella, is like this in itself is a lot of work that you've done before the trades even started, before the open. But what you've done is you've created an opportunity for yourself to sit there and learn from the experience. You can learn about the price action. You can pay attention to, hey, how does this trade move? You can learn about the way you execute when different variables are thrown your way, because you've isolated so much of it that you can just focus, and you've created a really good learning experience for yourself. At this point in your trading career, that's the most important thing to do. It's not to necessarily crush it in a trade or have your best trade ever or anything like that. Those are nice outcomes, but the most important thing is to continue to learn. And you've now set the stage for a really good learning experience. If any of these things happen that occurred in the game plan, that's just a learning experience. And that's something that you can actually grow from. And that's something you can carry forward to the next trade and the next trade and the next trade. And there are going to be trades that work out. There are going to be trades that work out better than you think. There are going to be trades that fail miserably. And there's going to be a lot of in between. But if you set the stage for a really good learning experience, you can actually learn from each of those, versus coming in with a random plan and saying, I want to buy above 50 because I want to buy above 50, look at the chart and it's such a great trade. You haven't done enough to create a good learning experience for yourself. But here you've identified the checklists that matter the most to you. You've gone through kind of a lot of the variables that would make it tough to be able to act real time. And then you've isolated, what do you really need to focus on in this trade? Now you can just sit back and learn. And that's kind of the fun thing. It sounds like you've done a lot of that in your trading already, where you've learned that just kind of buying into a support level isn't for you. But you have to set the stage in order to be able to just learn from every single trade, particularly early in your career, because that's how you experience that growth. That's how you wind up getting paid, is from learning from this trade and then going to the next trade and then going to the next trade. And now you're going to have a great, great example of having put in the work and then been able to relax and just let the trade happen. And you're going to remember this because you've done enough that you can just sit back and learn from this experience. Next time you have a trade like this, it'll happen faster, and you'll be able to execute it a little better. And then you'll be able to hold a little more size, or you'll be able to trade around it a little differently. That's all. It all just stems from creating a really good learning experience for yourself. And that's what I really like about all the work that's gone into this. This is not the fun part of the trade. This is the boring part of the trade. But if you're setting the stage for a really good learning experience for yourself, then you can just sit back and learn. You can sit back and trade it.
Yeah, and the other thing is that what I also learned is that it pays off.
Yeah.
So because when it actually ended up working, then it made it so much more fulfilling. I have been inherently been more of a scalper, so I was doing a lot of and I'm still doing very short-term trades. But when you do a trade like this, and even if you say, like you say, there's a lot of work to put in, when you see the results, you're kind of happy with it, and then you want to do more of that.
Yeah.
So, and it also kind of prints in your brain. You've seen it already. You've seen how it behaves, and the more you do it, I think the more you can get to make the most out of it.
Yep.
My reasons to sell once in the position were full ATR moves, breakdown of the uptrend, or moves below VWAP. And then also reasons to add to the trade when it's working. If it holds VWAP and VWAP slope is upwards, then that is one situation where I would be looking to add. Or if we get one of those really, really tight consolidations which happen throughout the day, like when maybe for 1 hour the price is moving only 10-20 cents. Those are very, very good risk-reward opportunities to add. So this is how the trade unfolded. From the game plan that we've seen earlier, the scenario that played out was first a move down and then a reclaim of the 50 level, where
On really big volume too.
On
at the
really
volume
big volume.
Yeah, look
Yeah.
at the volume acceleration.
Huge,
I actually
huge.
didn't notice that before. That's crazy.
Yeah. Very, very big. It actually, what was interesting about it was that the initial move down was on low volume.
Yep.
But then buyers stepped in,
Yep.
and that was so clear that people were waiting to buy
Yeah.
the stock. So I got in. I actually got filled at 49.99,
Nice.
which was probably one of the best entries. But
Where was your stop?
My stop was at the opening price of 49.
Yep.
And basically, but I do admit that I got a bit lucky with that entry. I don't always get them that good, but it usually helps when, especially when we talk about opening drives, it helps to look only at the tape.
Yep.
Because there you can see how it evolves. You can see how the bids are incrementing, and there's a lot of it speeds up.
Yep.
And then as soon as you see 50, then you can hit, and that's a good entry.
Yeah.
So
And you can only really sit back and focus on the tape if you've
Yeah.
created that good learning experience for yourself.
Yeah.
If you're having to think about, hey, what are the earnings? Hey, what is this
Yeah.
the most important level? Hey, you're not going to be able to just sit and watch the tape, and you're not going to be able to pay attention to the things that really matter. Is the tape speeding up?
Yeah.
Are they decrementing 50? Are the bids stepping up with it? Is it a situation where they're going to push it up and then let it drop? Like all the feel of the tape is something that you have to take care of all of the other things, and then you can just sit down and enjoy the experience and learn from it.
yeah. And then it was interesting to see how it unfolded, because what we got was a very quick up move on huge volume. So then I started to take a little bit off when we reached 180R to 5150. And I also noticed that the tape was stalling. The bids until up there were going up all the time. It was on a very, very fast. It happened very fast. And they were not going down at all.
Yep.
So only upwards. But at 5150, it started to stall. And that's for me it means that buyers were a little bit tired on that very big volume move. And we were already at 180R, which meant that other people maybe wanted to take some profits, like me at 180R.
Yeah.
So then I took 1/4 of the position. Since my risk for an A+ is 4R, then I'm taking 1/4 each time my targets are being met. Then we got a small move down, but it continued to buyers continued to step up. And I sold another 1/4 on a spike to the 53 level. And this is not an ATR move, and this is mostly for me an improvement area, because this is where I let my scalping qualities.
It's tough not to take some profits there.
It is.
With
The spike was
acceleration
looking good.
Yeah, with the acceleration that occurred, it's tough not to take some
Yeah.
profits there,
Yeah.
particularly for a momentum trade, because
Yes.
on a momentum trade, you're entering when the momentum's in your favor, but you also need to be exiting when the momentum's accelerated.
Yeah.
And that is some pretty serious momentum that probably does warrant an exit.
And on volume.
And on volume,
and on very much volume.
Yeah.
And then I took another 1/4 off when XPEV approached 54, or that meant 2 ATRs.
Yep.
So it was already, it was not even 10 o'clock in the morning, and I had already took off 3/4. It was already a very good trade. And I did let one runner, 1/4 of the position, in case this was going to trend the whole day.
Because it was a breakout trade.
Yeah.
You entered on momentum, you
Yes.
exited 2/3 on
Yes.
momentum, or I guess 3/4 on momentum.
Yeah.
But you were able to create an experience for yourself where you knew what type of trade it was. It was a breakout trade.
Yeah.
Just because you captured the momentum piece of it doesn't mean you shouldn't hold 1/4 of it for the breakout trade.
Yeah.
Again, that comes from the learning, setting the table for a really good learning experience.
Yeah.
If you're jumping into this trade late and not just able to sit back and focus and try and execute as best you can, you might be selling half or 3/4 or not selling any into the entire up move.
Yeah.
But here you were just able to execute, which is great. So
Yeah. And then this is where my thinking, and I went into a thinking mode where I was telling myself, okay, this is going well, where do I add? My first, I was watching VWAP. My first idea was to add at VWAP, but it's also a time when the market started to sell off. So that was a red flag to me. I wanted to wait a little bit and see what happens. Around 10:30, it went slightly below VWAP, but that was not very concerning to me because when you get one of those huge moves like that immediately after the open, then it's quite normal sometimes to get some breaches of VWAP. That doesn't necessarily mean that the stock will trend down.
particularly on a higher time frame breakout trade.
Exactly. So that's why it wasn't, and it's not only VWAP, it's also the level 5150, which was holding, and that was the initial stop at the open. So I wasn't worried. But then it actually broke 5150. So then I said, okay, now I'm moving my stop to break even for the last quarter that I was holding, and I will just see what it does later on. One interesting thing that I would like to add is that I'm using this bookmap tool, which actually shows I'm very visual, extremely visual, and I want to see, even if I see the tape, then it helps me to see liquidity in a tool which shows me exactly where there's a lot of volume.
Yeah.
And it was interesting to see that at 54 there was very, very big liquidity. So many people were actually waiting to sell at 54.
Which, if you were going to get a true acceleration, you're probably going to get at least a pause there if there's a ton of liquidity.
Yes.
And if you're going to get like just one of those crazy extensions, it's going to blow through that liquidity. You know, that liquidity would probably get pulled, and then you'd see no liquidity above it. And that's where you could really get kind of that explosive move. So it seems like you had set the stage enough to understand, or you've done this enough now, to understand, okay, there's a lot of liquidity there. I need to take some profits.
Some profits.
Yeah.
Exactly. This is, it's not telling you to sell or to buy. There's nothing like that.
Correct.
But what tells you is that it's a good level to look for targets.
Yep.
And that is where places where you want to add, where you want to take off something, some of the position. So after I move my stop at break even, then finally I get stopped when later in the afternoon the 50 level
and you got
fails.
But you got stopped only on the breakout piece.
Yes.
You did not get, you took profits on the momentum piece,
Yeah.
and you had a plan to hold the breakout piece.
Yes.
Which kind of sounds weird because it's all one trade, but it's really two trades that you're using one entry on.
Yeah.
So I think it's really good to give the trade what you needed to give it. And it sucks because you could have made, however much more by holding it, but you set the table for a really good learning experience. What if it would have come in, held VWAP, you could have bought more, and then it goes back to the upside? Yeah. What if it would have spent all day consolidating and then made a really nice afternoon move to the upside above your target? You would have been still involved with more. So you gave yourself the opportunity to learn, while also making sure you had a really, really good trade too.
Yeah. Yeah, and also, I mean, it's also based on what the market gives you, because this time around the market turned, so it also took the stock with it. But in many other situations, it will actually work. So then
that's great.
That's so much better. And I really kept my mindset was that even though the momentum breakout trade was done already at the open, we are still talking about a big breakout on the daily. So this meant to me that I still want to be involved in this trade. And what I ended up doing when XPEV actually ended up reclaiming the 50 level, I added back that 25%, that breakout lot that I had, because it had a very good closing. And sometimes when these stocks they close like this at with volume, it also means that they have there's a possibility that they may gap up the morning after. So that's why I decided to add it back. These are my executions, and it actually contains 2 days because I wanted to show what I had done with that final ad. And then actually I ended up taking the trade again next the momentum trade again next day. But that last ad, I ended up closing at break even, and that's another very important learning experience for me, because instead of we're talking about a larger time frame breakout. I have to admit that in this particular case, I was worried about not giving away some of the gains. And that was not the correct thing to do in this particular case, because if you're trading a higher time frame breakout, the stop has to be way lower than that. In this case, at least below 50, I would say even 49 in this particular case. So
well, it depends on the trade you're making too, because each of these different trades is a unique learning experience. The momentum breakout trade is one learning experience. The breakout trade is a different learning experience. The buying it back after a failed breakdown is a different learning experience. The gap trade's a different learning experience because you were talking about doing a gap trade. So if you were making a gap trade and you got a small gap and that gap failed, your stop was in the right place. The day 2 momentum trade is a different learning experience. By doing all the work that you did to identify everything that you identified before we even started talking about the trade, you set the table for all of these learning experiences to occur. It's tough to judge whether you did the right thing or the wrong thing on that gap piece, because that's a totally different trade. Like the reality is, if you're playing for the gap to just gap and go, that didn't happen, so it's prudent to take your risk off. If you're playing for a day 2, that's a little bit of a different trade. If you're playing for a day 2 momentum, that's a different trade. And so really defining what each of those are is a really important thing as well. But I think what's amazing to me is how many trades you got from doing that work just to set the table. And then you didn't have to do anything for the rest of the day, or really for the rest of the couple days. And as you get better at this and as you continue to grow, when you get an opportunity like this, you want to be able to make your day in the first trade, and then make your week between the 2 trades, and then potentially even make your month if this is a trade that really works out, right? And it's great to have one good trade from this. And a lot of times what happens is we think, particularly in a scalping mindset, it's one good trade and then one good trade and then one good trade and then one good trade. All of that work can be done for one trade idea, and then you can make all those trades within that and really put together a really nice day, week, month trading career just by doing that. But you have to do that work. You have to set the table for that learning to occur. And I think that's the best part of what you did here, was you did all this work to set the table for, if this happens, these are the different ways I could execute. And then you followed through on it on the second day as well. So yeah, you could debate, your entries and exits later in the trade, but the reality is you set the table for a really good learning experience. And I think you should be really proud of that fact. And now you can actually identify, is this how I want to execute a day 2 every time? Is this how I want to execute a potential gap play? Is this how I want to execute a day 2 momentum ad? Those are all different questions you can ask yourself. But the next time you walk into a situation where you have all those variables in place, you now have a really good learning experience that you can kind of carry forward into that and build off of and grow off of and get some confidence in. Even when we were talking about this trade the first time last week, I could see the confidence in you coming out when you were talking about this trade and the way that you executed it and kind of the approach that you took towards it. That's really what building a successful trading career can be, is you're doing this one thing very, very well, and then you're doing the next thing very, very well, all within the construct of this bigger picture. So I don't think there's anything really to be challenged by in this. I think there's always good things to learn from, but you set the table for a really good learning experience here.
Thanks. So just very quickly, a few words about reading the tape. Things that you that were super clear was when the breakout happened at the 50 level. The tape picked up in speed, and there were you could see a lot of buyers stepping up and moving the bids up. So there was basically no stalling or before 51.50 it was just up.
Yep.
And that makes you really confident
Yep.
about your trade.
Yeah.
And that's very important because
For
when you
somebody
feel
who's
really
reading
good
the
about
tape
the
a lot,
trade.
you know,
Yeah.
And are you recording your tape?
No, not this time.
Yeah.
No.
Oh man, it would be nice
There's-
to
that-
make sure you're recording it, and then in these reviews we can go through it together.
Yeah.
Because it just gives us a nice visual of what that looks
How
like.
it
I know
happens.
both of us can visualize it
Yeah.
because we've seen it enough, but it's nice to go through it together. So make sure you're recording your tape, because even if you just review it once a week, it's a very helpful exercise. So it's good though.
And then at 54, there were clear sellers that kept coming, although the volume wasn't impressive. And this is one thing which I'm trying to focus on and learn more about, because sometimes this kind of information can be misleading, because you see sellers coming in, selling at 54, but volume is very low. So then it puts you in a position where you need to plan and game plan what you do in that particular.
Yeah, if you don't have the liquidity, it can be a big challenge.
Yeah. So then in terms of review, again, we talked about that 53 level, which I sold into the spike. 54 would have been better, but still it's something to be improved. When I added back that last quarter, maybe I could have been a bit more bullish and maybe I could have had even more confidence in my idea and added as soon as it reclaimed 50. Because there were so many people that bought at 50, and that would probably defend the idea.
But I don't like the time of day of that trade. I do like the time of day of that of your ad after that, because then you had a very specific trade in mind for that ad, and that's something I like. You were trading it for the gap.
Yeah.
Right.
Yeah.
That second piece, you were trading it for the gap.
Yeah.
I don't like the just buying it back above 50 because it's above 50. Maybe it works, but I think you'll get stopped out more often than and I don't know. I shouldn't comment on that. I shouldn't say you'll get stopped out more often, but I do think the trade that you made was a really high probability trade.
Yeah.
So.
Okay. So I guess that's it. It's one of my best RR trades, and I'm really happy with it because it also shows that it shows me that I can do this type of trades even more.
That's great. No, thanks for reviewing it today. If anybody has any comments, I'm sure they'll make them in the YouTube chat. But this is a good trade, and it's a good learning experience. So please, make sure you review it. Make sure you study it when you're going back through earnings cycles. Make sure before the earnings cycles start, you actually go through this playbook and think through, okay, what did that look like? What did that feel like? What were the checks in my favor? Because you'll get offered this trade. The market will offer this opportunity a handful of times each earnings season, and the more you can improve on that every time, the faster your trading is going to grow and develop.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at S&B, train and trade well.